Happy Friday, traders. It is 8 a.m. Chicago time on Friday, April Fool's Day, April 1st, 2022. This is episode number 2204. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Looking at what we've got today, of course, today we have the U.S. unemployment report, the non-farm payrolls. Came in at 431,000, missing the 490 consensus and 460 forecast. The unemployment rate beat at 3.6 versus 3.7 consensus and forecast. There are a bunch of different numbers that get released here which have relative significance, namely the private payrolls, 426,000 versus the 480 expected, and so on and so forth. You can dissect those numbers by going to any calendar, looking at it. Average hourly earnings went up 5.6%. The market didn't respond at all at the very beginning, and then it sold off a little bit. So overall, mixed risk posture this morning coming into the day. The EU had some pretty hot inflation this morning, came in at 7.5 year on year for March, flash, 7.5% versus 6.6 consensus and 6.9 forecast. That's relatively significant. The U.S. employment and so on are in line as discussed, and we still have ISM manufacturing PMI for March at 10 a.m. this morning, expecting 50, or consensus 59, expectations 58.5. So that's where that stands. No earnings. We're seeing crude oil below $100. It has pushed up above the $100 mark and squeezed into 101.75 before holding steady here at $99. A lot of volatility in crude. The S&P shows volume at 158,000, which is relatively light, and with the inventories being 100% long, meaning all of the volume in the current session occurred above the prior session's settlement. And it's been kind of stair-stepping up. We'll look at that in a bit. The point of control has shifted to 45.46 currently, and which was a key target yesterday. I'll show you yesterday's consensus or yesterday's scenarios, and that's where we stand. So relatively inline volume, relatively light range compared to recent days. In my opinion, this is likely to be a snoozer. Today. The sell-off yesterday, I had warned during the Trader Bite and also on Twitter a couple times that it is a Q1 end and month end, and we're likely to see some fireworks into the close, and we definitely did. The NQ dropped about 200 points. The S&P dropped a fair amount as well. It dropped basically from 45.70 down to 45.27 or so. So that's where we stand. Not much more to talk about there. Looking at yesterday's expectations, the primary scenario was looking for a push towards the over-underline, the full session VWAP mid. I didn't expect it much above there, and that's at 02. So a squeeze towards the 00, the 4600 century figure, and I was looking for a challenge of 81. Once it breaks 81, likely to consolidate in that 77 region, 77 down to 50 to 56 or so. Expected a consolidation, but ultimately was looking for the 46, a test of the 46 to the downside. A really nice short setup there. Here's so that was scenario one was on point. It missed the high, but the lines here, the map tells us the extent to which we expect reversions, not an exact higher low. As I've always said, the goal is not to be calling tops and bottoms. Nobody makes money calling tops and bottoms. Well, they can by selling some service, but that's not the goal here. So here we are looking at yesterday. Open auction in range in the lower distribution of the prior session. Pretty choppy, but we ultimately got down and took out the 81. See the 81 holding right here, poking and holding. So I expected the test of the 81 to hold, consolidate. It ultimately starts to push towards that 97 into the prior settlement of 98 or so, and then it finally breaks down. The setup really, the first setup was right here. It wasn't very clean. It didn't give us a very good R factor. The pullback to mid at 85, 84 didn't give us a very good R factor. This one did, though, and it set up this move lower, and the expectation is for a test of the 46 right here, this initial bounce at the 46. That was the setup right here. The selling into the close, which, by the way, had a lot of volume in it at the bottom. There was a ton of delta selling there, very strong sell prints. Anything below the 46 was really just gravy. We did push in. The next level down I had was the 36.50, which was the prior week's settlement, and it did push through there. So we finished yesterday in what is a neutral extreme down. This is quite bearish. Take into context that it's the end of the month as part of the analysis here, but we had pretty strong separation from the day generated levels, and we started the single prints down from 45, 67, 68. This is the area to watch on the way up right here. Keep it on 67, 68, and we left a selling tail. We had a selling tail at the end of the day on a neutral day. Again, very bearish. Now you would expect that to continue lower in the overnight session, and it did not at all. We open up, we test the settlement, and then from there we have stair-stepped up in what is an ascending channel here, and we just broke it on the non-farm payrolls. The non-farm payrolls got short the 52.25 this morning. I posted the fill in the Convergent Trading Head Trader channel, and man, I expected a little bit of a flush, and the idea is not because we came in at 431 versus 460. That wasn't the reason for the short. The reason for the short is that the miss was expected to give us the continuation lower as we had pushed in the overnight session against this high volume note. So the overnight high right there, 45.55.50, is against the 45.56, which is the high volume node, the magnet in the area. And I was looking for a reason to get short. The non-farm payrolls provided that, and I think it moved down like 5 ticks before it came back to 52 and held there for a while. It took forever for it to roll over. It seemed like forever to roll over and get back to the target of 46, where the trade would be closed. So that's this morning's setup on the non-farm payroll, and I'm hoping that I'm wrong, but I think that's about as good as it's going to get today. I really don't expect very much. It is the beginning of the month, so there may be some flows, some adjustments coming into a new month, but overall, not expecting a stellar performance. Looking at the bigger picture here, I don't know why it does this. It keeps forgetting my displays. Looking at the bigger picture here, I talked about this yesterday at length. Let me change a pen, make it yellow, mellow yellow. Talked about holding this upper distribution right here. And if we break down then we are likely to fall into this valley and go to the other side. If you recall yesterday, please watch yesterday's Trader Bite. Let me see if I can link that in for you. Please watch yesterday's Trader Bite to see the logic behind the expectation yesterday. Yesterday was pretty much a textbookish. Here's the link in YouTube chat. Pretty much textbookish market auction, and volume profiling. If you recall, I said the ball dropping from the top of the hill, likely to test the bottom of the hill and go to the other side before it stalls out. This is what you saw. See this speed, this aggression. This is a 30-minute chart. See the aggression right there? That's what we have in a low volume node environment. When there's low volume in the past, it acts as if it's a pocket of dead air, and it falls through very quickly. And then you see how it stalled on the other side at 36. It went down to whatever it was yesterday. It went down to 26 and a quarter. But overall, it's holding overnight. It's holding right into this low volume zone pocket. And this further feeds into the expectation that today is likely to be fairly quiet, because what's happening here is we've moved from one high distribution to the next, and we are right here. So this is the ball kind of rolling back and forth, back and forth, back and forth. This basically, we have acceptance below support, which is support. We've held that support. We did have some end of month selling, so we've squeezed through a little bit more than expected. And then we ultimately saw the bounce in the overnight session, and I'm expecting it to act as support here with resistance above. So 45.77 down into the 45, 30, 36, 39 area. We're squished in between there, and I'm expecting it to be quite choppy today. Okay, so I'm going to leave you with that. I'm not going to put scenarios up. Yes, the key thing to take. Well, let me ask you. It's a quiz time. Here's yesterday. What do we expect now that we had an impulse? What's one of the things that statistically we would expect today at some point? Go ahead and throw out some guesses. If you've been listening for a while, you know the answer. Statistically speaking, we've got correction, retest, continuation, chop, 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 test the low, repair, 45.96, pullback, break the low, continuation, reversion to mean, blah, blah, blah. Okay, so this is a little bit of education here, hopefully to your benefit. We broke through here. You can look at this as a kind of an if you're a patterns guy, as an inverted cup and handle here. But we've broken through, and this is clear. Does anybody argue? Will anybody argue against the idea that that move yesterday on the close was impulsive? Would you argue against that? Do you think that classifying that move as a strong move down or an impulsive move, would you argue against that? If you argue against, if you agree that it's impulsive, then statistically speaking, this low is likely to be retested. So the expectation for today, if it does anything, it doesn't mean it has to do it today, it might do it on Monday, but it's more likely than not, historically speaking, it's more likely than not to test the 26 and a quarter. This down here is 26 and a quarter, and I would expect that low to be breached. Okay, so I expect this to break through. Not by much. There's quite a bit here in terms of volume. You won't see that volume on your classic bar chart or Heikin-Ashi or whatever. You need to see it on a volume profile chart. But we have a nice little ledge here. we expect that at some point the market is likely to test that low and make sure it's more secure before going in the other direction. Or if it's not secure and we break through, then we look for that area to act as resistance for a continuation lower. Okay, so one of the things that might happen today, not likely, one of the things that might happen, although it's only 20 points away, which is not hard to cover, one of the things that might happen today is we test that 26 and a quarter low. It's not a spike. It's not a spike. Now, if we did this and within the session we came back, we bounced right back, that would be a V bottom. That's not what happened. We closed at the low. If the auction did not run out of time yesterday, it would have continued lower. Okay, so that's the difference. That's why we don't see that as a spike. That's why we don't expect a reversion. And I want to reemphasize that anything can happen. Anything can happen. It can decide that, okay, April, we want to buy them, and they come in and buy this thing right back to 45.77 is the key area above. 45.77 is an area that you need to have marked on your charts right here. So if they take them up, that's where I expect them to take them to. That would be the next test area. But overall, I expect this thing to chop, 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 maybe skew down and get us back into this composite point of control in the 30-32 area. And I expect to test the 26 at a minimum today or tomorrow. Okay, so I'll leave you with that. No scenarios, whatever. It's likely to be a pretty choppy day. So me putting up a bunch of. Let me throw my levels on here. So this is my map for today. So if we do take out the 26 and get some more selling, then we're looking at 45.12. We are underneath the magnet. We actually tested the magnet from below, and the over-under line is up at 45.77, and we're below it, so I'm skewing to the bear side. I expected us to sell off yesterday. I talked about that at length. I linked that YouTube video, pre-market trader bite, in if you want to watch to see why I expected the selling into 46. But that's how we do it. This is how we've been doing it for the last 15 years out of 22 years of trading. Same process, just follow the story and look at how things are auctioning to be able to create a plan for today based on your price map. That's the process. Happy Friday, all. Be safe. Enjoy your day, and don't fall for any April Fool's jokes, okay? Don't fall for any tricks. Good luck, and I'll catch you tomorrow. Take care. I won't be here tomorrow. I'll catch you on Monday.